Hey everyone, welcome back to the Your Money Life podcast. We're in episode 333, 333 episodes of this podcast. So make sure wherever you're listening, you like, subscribe, probably five-star rate and review this pod before we get into it. The first thing we'll start with, we usually start with, is the market update and giving a little update on what's been going on in the stock market, the financial market. So let's jump into that first and foremost. We've seen a little bit of interesting movement, I would say, for the most part. That would probably be the best way to describe what's going on. First and foremost, if we look at, I've actually delivering this podcast a little bit late to you on Thursday morning, was on a 1 day travel trip. Have you ever done a 1 day travel trip and taken a red eye back? I haven't done a red eye in a while. The wife and I had to do some stuff out on the West Coast, and we're back. Same in 24 hours. That's pretty cool, pretty quick. But it does take a little bit of energy out of you. You have to kind of like get your energy back, and I am doing that. So year to date, let's look at the S&P 500. Year to date, the SPY ETF Trust Spider still up around 7% year to date. 6 months, you're looking at around over 6%. But if you look at the past month, past 5 days, there has been a little bit of a pullback, a little bit more volatility in the market. We've had the inflation print that we'll talk about was one of the themes of what's driving the market right now and what investors are processing as they think about their next bid in this market. 5 days, about 2%. So again, last trading week, last 5 days hasn't been the strongest. Today, again, the market's about flat to up on the S&P 500. But again, if you pull that picture out over a year time frame, over a 5 year time frame, a pretty solid picture. Gone through multiple iterations of themes and things that people have told you would have taken the market to zero. But again, that's not going to happen, not in our lifetime, anyways. And so, if you look at what's been happening over the 5 year period, again, it's still a strong marker. We're just, if you pull this out 5 years now on this chart, look at what we're dealing with, this little blip that could be more correction, but it doesn't mean that it's the end of the world. It's actually a positive sign for younger investors, a chance to get in at depressed prices. That's what you usually want if you're an investor for a longer period of time and think that you're buying an asset that has some appreciation value. Let's look at what the market is mulling over. Micron surged 18%. So the chip maker reported its fiscal third quarter results. It tops expectations and they were raising guidance. So that was a big surge. The people market really likes their quarterly report and their expectations going forward. Other semiconductor stocks gained after revenue guidance, like Qualcomm as well. Sandix, Western Digital. It's a really good day for semiconductors. May's personal consumption expenditures price index. So the Federal Reserve's preferred inflation gauge, the personal consumption expenditures price index, showed that the headline index rose 0.4% on the month, just below the 0.5% rise that economists polled by Dow Jones were expecting. The headline index also rose 4.1% on a yearly basis, which was in line with expectations. So if you strip out that volatile food and energy prices, the core PCE, that core personal consumption expenditure price index gained 0.3% on the month and 3.4% year over year. So again, a little bit hotter than like the Fed would probably want to see. They want to have that 2% range. They want to get closer to 2%. But as you see here, the personal consumption expenditure price index is actually still hotter in line with what we saw on the CPI side. So those are things to watch, and I think the market's reacting to that slightly a little bit as well as the Micron news, which is the big news. The chip maker jumped 70% on some positive um, guidance and expectations beat as well. So big things in the market, not a crazy time again. July, August, as we get into July, August is usually slower times in the market, so it's not strange that you might see some volatility during this time as well in the market. So let's look at what Meta is doing. Meta does a 180 and reassign thousands to AI trading. So remember Meta, we did this story a couple months ago. They were going to do thousands that were of their developers, their employees to train their AI models and then presumably let these people go. But Facebook owner Meta is reversing last month's decision to redeploy thousands of engineers to AI training roles. An internal memo, Meta now says it will defer to each individual's choice about whether to assist on the AI effort. The so-called draft had sparked serious backlash among Meta employees, just as morale across the company more generally fell to probably one of the worst it's been seen. This was said by the CTO in a recent interview. So they were going to have their AI training task force in which 7,000 employees were going to be forcibly recruited in May to train AI. And it's no longer mandatory. So I'm assuming like no one's going to do it. I mean, what if you're that one person that says, I'll do it, and then you get like some brownie points, I guess. I don't know how that will work, but you'll be ousted by your teammates pretty much. It was significant backlash from engineers assigned to the unit. They now have the option to leave if they want, according to an internal note that a gentleman obtained. And for people familiar with the matter, employees are calling this the undraft. So the people were drafted to train the AIs, the models, and now they're giving it a role because they saw the backlash. They saw how it was such a morale killer within the company. And they've now changed that to people have a choice, which is probably the right move, probably the wrong move in general earlier to just make people train the AI. That just doesn't sound like it would be well received, especially if they know that this AI is potentially learning how to do their duties. That just doesn't make sense. So I think they're trying to correct course here. We'll see how that works out. World Cup, for those who watch the World Cup, I've actually been watching all the highlights and some of the matches in live, and then a lot of all the extended highlights on YouTube. Been pretty fun to watch actually so far. You've seen the U.S. make it, seen many other 32 teams countries make it. Canada looks like they're going to make the knockout stage for the first time. So we'll be watching closely to see who wins. I think France is just undeniably, again, I'm off in my guesses, but if I had to put a guess, France looks like they had the most talented team. Although I did bet on Norway because I had my wife just guess, and we bet on Norway. She just picked Norway, so we're rocking with Norway. And they have a very outside chance, but they have a chance. Everyone does. It makes it to the round of 32, the knockout stage. We'll see what happens next. It's gonna be pretty fun to watch. We did talk about core inflation already, hit nearly a 3-year high in May. So again, the consumer spending sped up in May, even as inflation hit a 3-year peak. And this is according to the federal data out Thursday morning, this morning, for those listening early. The personal consumption expenditures index, we talked about it. Again, that's the big theme right now in the market, and the market's reacting in kind. It doesn't look like it's really affecting too much as we're up a little bit slightly on the day currently. So we'll keep an eye on that. Other investing news, Bitcoin sell off yesterday. Bitcoin's recent sell off has brought to light the vulnerability of its market dynamic as retail investors who once provided support during downturns have mostly disappeared. So, yeah, a lot of people do this during the cycle of crypto. They'll disappear and they'll come back when it's being talked about later in the year. Again, I see this as an opportunity for investors that are really, really interested in holding cryptocurrency for the longer term. Make sure you're understanding what you're purchasing and not just in it for the quick ride, but opportunity abound for those that are still looking to hold this asset. So, of note, a few other things. We did see that content providers are cutting deals with AI companies. Did you hear that? Content providers are cutting deals with AI companies. So, Getty Images surged an eye-watering 90% yesterday after the company announced a multi-year licensing and product partnership with OpenAI. So that makes sense. If they're going to be using and placing their images within the responses of the chatbot, that has to be licensed. So under the agreement, OpenAI will license Getty's library of images, videos, and metadata for use in training and improving its AI models, while Getty will integrate OpenAI's generative AI tools into its own products and services. The deal comes as Getty faces growing pressure from generative AI tools that can create stock image like images in seconds. Do say that 50 times fast. Stock image like images in seconds, threatening parts of its traditional license business. So they're saying, hey, we want to just get in on the game before you guys take us out. And now they've struck a deal to kind of help each other. And Google also revealed it's investing roughly 75 million in an independent film studio, A24. That's interesting. A24 makes movies. As part of an AI partnership, according to the Wall Street Journal, under the agreement, A24 will work with Google DeepMind to develop and test AI tools for filmmaking and production workflows. So they just said 75 million here. Let's work together. So again, you're seeing AI kind of convert into all areas of creativity of work. This is quite interesting and something to keep your eyes on going forward. A lot there to swallow, a lot there to understand. Let's look at the question of the day and the week. For us, it's the question of the week. We're going to do a good one today. The question is, can you name one of the top 10 best employers for women? One of the top 10 best employers for women. To all the listeners out there, for women, can you name the top 10 best employers? I'm going to go, it's going to be roughly the same employers that are, I would assume, the top 10 best employers for everyone. You're going to see Google there. I think you'll see Amazon, see the big tech companies, maybe Apple, Microsoft. Trying to think of something outside of tech. Who else would do banking? JPM, JP Morgan, maybe. Um, let's see. We got NASA. Okay, NASA scores 100 as the top place for working for women. That's pretty impressive. Johnson and Johnson. I should have guessed that one, but wasn't thinking there. That's number two. Kansas State University. Interesting. I wonder why Kansas State University just happens to be the top employer for women. Children's Healthcare of Atlanta. Okay, Mutual of Omaha. That's interesting. Insurance. Hogue. It's a health and social services company. So I was way off. Blue Cross Blue Shield of Tennessee. Nationwide Children's Hospital for Pedestrian Senior Care, and Fairway Independent Mortgage Corporation. Interesting. This is from Statistia. It's the eighth edition of America's Best Employers for Women 2025. It's based on an independent survey of female employees conducted via professional online access panels. Wow, so nothing in tech. Interesting. So really, you're seeing healthcare a lot. Aerospace and defense being number one was quite interesting. I would not have guessed that. And nothing in tech. I wouldn't have guessed that either. So, hey, folks, if you're looking for a job, those are some places to look for my female listeners there. Those are good places to look. Folks, another place to look is to make sure you can check in here with us weekly. Also, share this with family and friends because we do this every week. And of course, we will see you next